Do we dare to be bullish? That is the question. Welcome back to this Sunday Report. My name's Josh, and let's break down the week. And just one quick update before we get into the content. I am rebuilding the stream store. We had to destroy the old one. I'm working with the team and also getting the live stream content properly built into the OBS plugins as well, which is what I use when I'm live streaming. Hopefully that'll all be done sometime this week, maybe as soon as tonight. Some of this is out of my control though, so I'm not sure when it'll actually be completed. Just want to give a small update on that. So a lot happened in the crypto space. I'm not going to talk about it on this video. We'll probably do a separate video for it. Although I've been talking about it a lot in the Discord. We made a few TikToks about it, kind of mentioned it here and there. But I will say that we did a little promo for people who lost a lot in crypto and are wanting to keep it in the space. If you missed that promo, but you're watching this right now, go ahead and post in Discord, say you saw the Sunday report, and you can also get access to that promo and get a free month membership to the contender section. And trust me, the knowledge you gain there will help you for much longer than just a month. So this economy is awful, like really awful. And we're pretty much in a recession, although the technical definition of recession will be 2 quarters where we are regressing in our GDP data. Now, I think that we can pretty safely say that that has already occurred and that we pretty much are in a recession. Although if you listen to the Federal Reserve or different Fed members, they are pitching a whole different story. And that's because they had to fight this inflation. Now remember, this recessionary environment, if recessionary is a word, is different than ones that we've had in the past. Okay, we have really low unemployment, okay, which is strange for this type of environment, and really high inflation. These are things that you typically don't see, although we are seeing the jobless claims start to kind of climb back a bit. And this could be correlated to the stock market. If you're not sure how that plays out, it's because of how many of these corporate packages are built into stock performance. If the stock market doesn't do as well, a lot of the upper management will start losing money or losing their bonuses, and they'll turn around and use this as an excuse to cut back on jobs. You'll also see a lot of startups start to cut back on how many people they're hiring because they're getting so much less interest from angel investors, and so much, their investments will start to drop. Investors in this type of environment are getting burned repeatedly, and they're going to take less chances now, especially if they've repeatedly had lots of losses. And this is something that I've also built into the Discord when it comes to, the big brain education section. Let's pull that up real quick. So when it comes to the mentality of trading, it's very important to understand how the mind works. If you're winning, you get that serotonin pump, you get the dopamine feedback, and you continue to do well and get that feedback, and you just keep making better decisions. But it works just in the same opposite direction, where you can do exponentially worse if you're already doing bad. You could panic, you could try to revenge trade. This plays both into investing and trading, which is why when I first built this Discord, wanted to make sure I added this type of content in here. Technical analysis is basically the psychology of money, but that doesn't really help you with your technical analysis of your mind, so that you can master this. So when you start to lose, you don't continue to get those losses get out of control. You learn how to reset your mind so that you can stay in the game. Because remember, this isn't a game about, get one big win and then we're done. No, we want longevity, right? We want to be able to bounce back from the inevitable loss streaks that will probably happen. So if you've been on one, if you're having a rough time after, the heyday that was 2020 and 2021, and you're struggling in this market, take a moment, reset your goals, figure out what you want to do, maybe give this section a read, and see if this information is helpful to you so that you can better understand that. I've heard lots of people talking about this, even professionals talk about this. One of the things that hedge funds do is they'll even rotate out traders that are performing well for ones that are performing well, and they'll have constant rotation so that who's in charge of the most capital is someone who's been on a consistent winning streak. Doesn't mean that person will always be on a winning streak though, which is why they still have lots of traders at that institution, but they'll cycle them out because it's nearly impossible for an individual, especially on their own, to just constantly be a winner. And that's one of the great things about the Discord, is we have a community here of people you can lean on. So make sure you join that as well. So back to what's going on right now. This market's been bleeding heavily. I said that the market was headed for 380. we hit about 385, but then we saw some good buying coming in. We saw some building momentum, and we see people trying to dip their toes. Now, remember, this psychology is playing out for everyone. Everyone's been burned a lot, and we've seen a lot of hesitance when it comes to buying this market on these dips. But it is pretty normal to see bull rallies in bearish markets. So what am I looking for when it comes to this bounce? Well, first of all, I want to point out TLT has started to turn, which is great. That's starting to play out. I'm super happy about that. We've seen this market come all the way from 385 already back to the 400s. So what I'm looking at here is Tesla. I want to see Tesla back over that 800 mark. I think if we can maybe get to about 810 range, we should start to see some momentum build, and then maybe we'll build back up to these 850, 860 range. Apple, I want to see Apple get back over the 150, and I think that'll be another signal that we're in a good bullish momentum in the short term. Remember, this economy is really rough. We're talking about a short-term opportunity for some bullish movements. When it comes to companies in particular that I'm looking at, Roblox is also another one that kind of has my eye that I'm looking at. They did decent on earnings, and we're starting to see, already tons of interest come in. I mean, look at all this volume. People are like, oh, okay, this must be a good time to come in. TDAC was another one that I was interested in. This is really taking some more to get off the ground, though. We did see a lot of build up here, but then we ended up seeing it still managed to find another new low before we built up some more. And this is just, remember, this is people trying to dip in their toes. They start to get burned. We'll see how the psychology plays out on this, even though, like I covered last week, I don't think that this was as bad to warrant this huge drop for this particular company. So we'll look for those signals, mainly from Tesla and Apple, to kind of play out. Keep an eye on the dollar. We're seeing the dollar kind of do some back testing right now on this rally, but we did hit that 105. Like I said, look at that. Just touch the 105, and now we're back testing. And I don't think the dollar will continue to the downside. I think this will start to come right back up as well. And the thing that we're going to be looking for is that we want to see those catalysts play out. We also want to see VIX not get back above 30. If we see this make a big move above 30 again, then we'll start to get worried. We saw it try and test above the 30 here, but it wasn't a substantial move here. UVXY is back in the 16 range. We see that get back over to over 17. Then we'll start to get worried. Now, for what is the big looming catalyst for a bullish move, though? Like, what will cause these to really come up? And to me, there's only one catalyst that really stands out in my mind. But before we get into that, let's go into the economic data coming up this week. So we have some Fed speeches coming up. These have continued to be bearish. The market's always had some sort of drawback when these speeches start. This one on Monday is going to be before the market opens. The rest of this won't matter much. There will be a point in time, it's worth saying that there will be a point in time where this bearish economic data will start to be bullish for the market. Why? Because it will start signaling that the Fed can't continue to clamp down on this monetary tightening, and they may need to start pulling back out of fear for how much damage they're doing to the market. Now, I think we're pretty far from that point occurring. Okay, they need to tackle this inflation, which is still being persistently high, although a little more stagnant. It's not continuing to climb, but the fact that it isn't going away and that everything that they're saying about how it should isn't happening. And remember, they were slow to do this because there was that transitory narrative, which, I think a lot of people bought into. And it's a tough call to make. But now in hindsight, 2020, not the year, but the phrase, it looks like it should have been an obvious move for them to move quicker to tackle the inflation. So now there's worries about they're too slow, and now they have to make this move to fight it and combat it no matter what. So we're sane, definitely we're sane. And speaking to that, we're going to have Powell talking on Tuesday at 1 p.m. Make sure you're aware of that as well. We had the housing starts, building permits. Looks like we have a Fed Harker speech and some more bond auctions. Those will continue to be interesting. Japan's doing really rough. Remember, they're a large buyer for U.S. debt. And existing home sales, initial jobless claims will be another interesting economic data point. The jobless claims have started to kind of build back up again, as we have also seen these companies kind of pull back, like we already spoke about. So that'll be interesting to see if the unemployment numbers, that is, start to reflect that as well. But that's about it for this week. Now, this is usually the part of the show where we go over company earnings, but we haven't been doing that because this is a very macro-based market where everything's kind of moving together and sectors are more, we're really paying attention to that. But one of the things I want to point out, which I think I've iterated before, biotechnology is looking extremely appealing right now. Some of these companies just straight up undervalued. Even if more downside comes in, I've been dipping my toes in a lot of these names. If you're in the Discord, if you're one of the subscribers, I've been consistently updating on what companies I like, who I've been picking up, where I've been kind of toe dipping a little bit and picking up some allocations here and there. Even if there's more downside in this market, I think 5 years from now, innovation's where I want to be. So when I see these clear signals where it's like, okay, this company is now valued less on the market than it is outright. Okay, so that it is on its books. And when I see that, that's a clear signal to buy. I'm okay with making a move there, even if I'm not perfectly timing a bottom, which never really happens anyways. Perfectly timing tops and bottoms is very difficult to do. So what's this big catalyst that I'm looking for right now for the greater market? China reopening. I think that we could see China reopen this month, maybe this week or the next. I think when that occurs, you're going to see some relief from this market, a nice sigh of like, okay, we can start maybe fixing some supply chains and we can really get away from this COVID nonsense as a globe, entirely away from it. And considering what a huge trade partner they are with everyone, maybe there'll be some hopes that there'll be some relief from this reopening. We can restart, that large economy and get them participating, because right now 40% of their economy shut down. And we've also seen them put out some reports looking like they're gearing up for that. And, kind of looks like they're painting the narrative of like, oh, we have a zero COVID policy. And by us doing this, we're going to stop the next big outbreak. And none of these other countries will have to deal with it because we stopped it here. Where it all started the first time, we won't let it happen a second time. And now we're the big heroes and not this evil tyrannical government. All right. They got their narrative in place. Now they can move to reopening. So opinions set aside from how nonsensical that is, we can say, okay, it probably will have some positive reflections on markets if that does occur. And a lot of these shorts and these Chinese stocks will probably also run for the hills as well if that occurs. Now, and on top of that, they've also been providing some stimulus to their own markets too. So we could see some ripple effects from that, where that provides some support, and people start to feel like, okay, I can dip my toes a little bit in for a short-term rally in this market. So maybe some people even be more confident about that. Like, okay, the lows are in. I do not expect the lows to be in. I still think there could be lots of trouble in this market. But remember, if we're trading and we're looking for these timings and we want to act on these, we need to have a plan for if there is going to be a short-term rally. And the other thing I think is important to keep in mind is the way the options have been acting in this market. I was kind of tweeting about it, about gamma hedging. And so it's important to understand how the market makers are reacting in this environment. And one of the ways, there's several different ways that you can keep track of that are relatively complex. And not all of them are within my lexicon of knowledge to the degree that I would want to talk about them on a YouTube video. But basically what we will probably see this market start to do is exaggerate all these movements. We say you saw this exaggeration to the downside. Some of that was psychology, but there was still this high amount of options trading. And so, as I said before in the last video, when you're looking for this market to start to turn, look for more people to be buying puts than calls. And sure enough, as soon as that happened, And we're watching the call and sizzle index, all right? So as soon as that happened, we saw this market start to turn, and it started to get bullish again when we saw more people buying puts than calls on the S&P. Funny enough, it's not an exact science, but it's been so freaking accurate. It's hard to ignore. Every time I see that, it's been a clear signal of like, okay, looks like buyers will start coming in because the market makers will start repositioning themselves. And we've seen the volatility also not catch up with the downside in the market. If you remember last week, I was saying, oh, I want to see UVXY get into the 20 range. Then it never happened. But the market kept bleeding. But volatility wasn't catching up the way it should have with the way the market was moving. And you can watch it. If you go back, look at the charts, look at all the stagnation and the volatility, but look at the way the SPY was moving. Market makers are what's causing that. So I think that they've reset. We could get a nice bullish breath before we see the shorts start to build back up again. And I think this market start to downturn. Now I'm getting a little off track, but that was an important piece to add. I think that these rallies could become over exaggerated. So when it comes to predicting a top, I'm not doing it yet. I'm instead looking for signals for what will continue and hoping that I can chase that. I do have some positions already set up that we set up on Friday to hold into the weekend and into this week. But that isn't, those aren't large positions. I'm more of looking to be reactionary. And when I start to see those options kind of give the signal, and when I start to see VIX better track with the market, then I'll say, okay, this is likely the next top, and then we'll return to more downside. But right now, I'm not going to make any strong calls on that because I just don't feel like it's a smart time to start making some hard decisions. I'm just more of, like I've said many times before, setting out plans. So I feel like we could probably see 409 and we could maybe push to 420. Although with the way this market is, with the way those option mechanics work, and with how the market makers are hedging themselves, I feel like these trends could become overextended and catch people off guard, just like the SPY trend was continuing on the downside. And so we'll be looking for signals like that. If we start to see some stagnation on a bottom on UVXY, but the market keeps melting up, like, okay, something's off here, this isn't communicating right, that could be one of the signals that we see. Or if we see a change in the options value, that option signal starts to change on us when the market's melting up, we'll be looking for signals like that, so that we can change our perspective. Because remember, this is a short-term move that we're looking for. I don't think that this is the bottom for the market. As I've said before, lows could get as low as the COVID highs, which is in the low 330s. And so we want to keep that in mind. But China reopening, I think, could be a nice pause for this market. And we could see that continue up until there's another downside catalyst, whether that's the next interest rate hike, maybe something with inflation, maybe something on the geopolitical level with Russia. There's still a lot of things that could disrupt this move, a lot of negative headlines that could hit the tape, and you're going to need to react. So remember that if you are not able to track those, don't over position yourself just because we see a short-term rally, and understand that this is a short-term rally that we're anticipating, and we're still in a very bearish market that is heading for an official recession, which I think already is a recession. However, for lots of people who are seeing that, who are saying, well, what do you mean rally? Look how bad everything is. Remember that we're trading. I'm trading. I'm a trader. So when I'm looking for these opportunities, okay, I have my catalyst picked. I have the technical levels I'm looking for. I have my plans written down, and I will follow them to the T. If something unexpected happens, hands off the wheel immediately. If I don't anticipate it, I'm not going to trade it. Okay? So if there is a super negative headline, but it isn't one of the plans I've written down, if it's something that caught me off guard and I don't already have an anticipated way that I plan to react, or it isn't super obvious to me on how to react, so it isn't some sort of historical reference I can draw on it to say, oh, when this happens, this usually is the next catalyst, or this is usually the effect of it, then hands off the wheel. Then I wait to see how it plays out. And then if it happens again in the future, then I will react. But anything I'm taken off guard by, I'm not going to move on. And that's where I'm saying, and I think that's the wisest way to handle it. Now, let's also take a moment to talk about Elon Musk and the Twitter buyout. I think Elon's got a great positioning right now. There's some debate over whether the buyout won't happen, if they can pull it off, or if Elon's losing too much money because of Tesla stock going down. The thing is that I think that the buyout price of Twitter is going down more. And we've already seen partners come in and say, hey, we'll help with this buyout opportunity. We think this is a great move. If Elon can continue to paint the picture of Twitter has committed fraud because of all the bots that exist on their platform, has been inflating their numbers, they don't have as high numbers as they're saying, and look at these toxic algorithms they've been using, he could easily bring the stock price down even more and pay even less for the company. So I don't think anything that's happening to Elon, any of those negative effects of the stock coming down, maybe his net worth coming down because of it, will affect this buyout. I think it is for sure going to go in. And I think his position as temporary CEO is also going to give him insight to the inner workings of the company. And we could see more negative things turn up because of it. And we've seen the current CEO make some comments on Twitter as well. And it looks like the guy's just covering face. To me, even though everything he said seemed to be positive, it seemed to be positively reciprocated from the Twitter community. Although I think that, I think those group of people kind of live in a cultish bubble. So I don't, to be honest, I think Twitter kind of is a bubble because not everyone's on Twitter, but I think in particular that little segment of Twitter, these anti-free speech people, the Bill Gates types that like to act like aggressive totalitarians, where they're like, well, we're protecting you by not allowing you to say what you want. And, and this is just egotistical, multi-billionaire who's sick of people spreading rumors about him. But it's like, you can't control what people say just because you don't like it. It's very childish. You're worth billions, dude. Get over it. If there's a rumor you don't like or you think is nonsense, get over it. You already have more access to things than anyone else in the world. You're one of the richest people in the world. What else do you need? Do you really need all the people's love to do what you do? Be more stoic. If you're doing the right thing, then just do the right thing. So the fact that he's even so butthurt about this just makes me question his character. And the anti-free speech people, I think, are out of their minds. It's just the foolery of new generations always thinking, well, this time it's different. This time it's definitely different. And those old rules, they don't apply, even though they've always historically applied. Social media is different, and social media is not different. Social media is the extension of us. And maybe there's some differences in the fact that you can say more hateful things on social media than you could to someone's face because you'd get smacked. But besides that, I don't see this really being different. You can't suppress free speech. You can't stop misinformation. You need to let ideas battle themselves out. As any great scientist will tell you, that that you need to act with humility and not assume that you know all the answers and that no one else has anything else to add. Especially when some of these conspiracy theories have lots grounding them, like the Wuhan lab theory. I mean, to call that ridiculous or just to write it off with the conspiracy theory label is ludicrous to me. And to not, it doesn't mean that you need to promote it, but to suppress it just makes people even more concerned. All you do is just make the waters even more murky, and all you do is just really rally people up into it even more. So Bill Gates is doing nothing but being self-destructive with his reputation, even if he is doing the right thing. I don't see it as a good move. And the fact that there's no one around him telling him how ridiculous it is also really troubling. It just shows how much of a bubble these people live in. So, sorry, I got a little derailed from the Twitter buyout in particular, but I think all of that plays into that storyline, and we'll need to see how it continues to develop. But I'm pretty positive that Elon will get the buyout, and I'm happy about that. I think it can make a lot of positive changes to the platform, and I think it will hurt the competitors a lot if he takes over. We saw Trump say that he won't return, even though Elon said he would unban him. We'll see how long that lasts. If he starts to run for election again, he'll want the larger audience that exists on Twitter. And I don't think, or maybe he'll use it as an opportunity to try and bring even more people over to True Social. But we'll see if that actually plays out, because I don't anticipate it will. I think instead what you'll see is someone like Walter Bloomberg just start to repost all his tweets to Twitter, and people aren't going to use a whole other app when someone else will repost it within seconds of him saying something on the other social media. And what's he going to do to stop that? Nothing. He can't. So that's what I see playing out in those regards. And I think that'll be it for this week's Sunday Report. I hope you enjoy, and I'm hoping to do some more content coming up. We'll do a crypto video because a lot's been happening over there, although we've kind of covered some of those subjects as well over on TikTok. And of course, I'm always tweeting about stuff as well. And of course, if you want where all the treasure trove of information really lies, that's in the Discord. Make sure you click that link down below and join the community. If you haven't already, love to have you on there. And I hope that you had a great weekend, and let's dare to be bullish. I'll see you next week.